Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session that responsive buyers were active ahead of yesterday's low and ended up pushing ES back up towards the 87 quarter pre-market resistance from yesterday. So that bullish bias continues to be in play, and heading into the open, we know that the buy side is in firm control. But at the same time, the market is now near a short-term inflection point, and we're going to have to see continued broad market strength and upside momentum in order to put in a breakout above 87 quarter to 89 quarter. And absent any strong buying up here, we can continue balancing in this small range, perhaps consolidate a little bit more, and then break towards one side or the other. On the downside, we have initial support at 77 to 80, and ideally we'd like to see ES holding above that area, and a break of initial support would itself be a warning sign. But from there, if we break below yesterday's low of 75 quarter, then we would be breaking below this small balance that developed over here. And as long as there is sustained downside momentum, then that would be a very short-term balance breakdown, and we may not get as much of a response at 70 to 72 half. So the 70 to 72 half zone would only be traded in the event where the market tried to break down, but there was either a very notable positive divergence heading into it, or a disconnect between the advanced decline and where price was trading. So essentially, we would have to be in an environment that doesn't really support a downside liquidation. That would be the only time where 70 to 72 half may be worthwhile trading. Otherwise, on the downside, if you are breaking below 75 quarter and you've already failed at 77 to 80, then that could trigger a short-term long liquidation move into the 63 half to 66 half, which is really the next key support on the downside. And that's still an area where the buy side can defend on first test. But our primary focus heading into the open is not going to be on the downside scenario. By default, we are giving edge to buyers, and as long as we aren't seeing any clear-cut signs of a failure at these higher prices, so as long as we're not seeing strong downside momentum, sustained tick readings below zero, and weakness on the advanced decline, then the market can simply consolidate a bit and then still eventually put in a upside move and resolve to the upside. But in order to get that upside move, we are going to have to see sustained upside momentum as well, and broad market strength, and we'd have to see the Russell starting to go higher as well. So far it's lagging a bit, but Nasdaq and ES are pretty much in sync right now, and on NQ, as long as NQ is breaking out above the high from yesterday, 46.77, then it can also support the idea of a breakout in the S&P, targeting the 93.5, 93.75 naked VPOC open gap, and the 96.75 to 99 initial resistance zone. Now, so far in the overnight session, we've seen the volume has been fairly light, and if that continues into the day, then the market would be short-term exhausted by the time it got to 96.75 to 99, and we could get some profit taking, and responsive sellers could be active on first test of the initial resistance zone, if for no other reason, just because the market could be quite exhausted by the time it gets there, especially if we're running on light volume. If the volume picks up, then perhaps it would be possible to go a little bit higher, but if the volume continues to be light, then we would be short-term exhausted heading into it, so that would be a good spot to exit any longs, and at the same time, depending on how we approach the zone and what type of range the market has already established on the day time frame, the 96.75 to 99, especially towards the middle to the upper part of that zone, could provide a small short setup as well on the day time frame, just as a tradable reaction. So the main focus this morning is still going to be on the long side, but absent any sustained upside momentum, we'll have to be cautious. Keep an eye on yesterday's high as well, 83.75. Holding above it would be a confirmation of buy side strength, but 2080 is really the short-term key spot right now, and as long as ES can hold above that, then we could still consolidate and resolve this pattern to the upside. because overall the bias continues to be bullish. So we'll still continue our focus more on long setups, still favor the longs with the idea that the market is at a short-term inflection. So if we are not seeing any buying from here, then we're simply stuck in a range. If we get strong downside momentum and broad market weakness, then the door would be open for a short-term breakdown. But again, we still do want to favor longs, and unless we see clear-cut signs of a failure, we will continue to be cautious on the short side. So those are the main ideas heading into the open. Let's see if the buy side can maintain the strength, and we'll take it from there.